Da da da.
So since 11th of October, we've had a bearish momentum on Bitcoin, and it's been declining now for a few months. It's finally hit this support area at 84,700. It's actually got a triple bottom there. You'll notice the moving average of the price chart is very narrow, which is indicating consolidation. But you'll notice as well, the CCI 150 down here is broken up through the moving averages. So what that shows as well is a potential bullish divergence. Now, if that was to pull back, we would draw a Fibonacci retrace as a minimum retrace to the 38% retrace level. That's a minimum, and more than 90% of the time these bullish divergences are executed. So just keeping that in mind, we don't suggest to go long yet until this price breaks above the moving averages and we start seeing a clear break like we did back here. That was a false break. So there's no guarantee ever in any of these strategies. On the hourly, so if you're trading on the hourly, we all go in the direction of the daily. So on the hourly, we go predominantly short. And that's what it would have looked like from the 11th of October going short. Now you'll notice here on the back test, we've got some drawdowns, and those drawdowns would have been avoided by closing out your trades when the moving average band starts turning up. So you would have gone short during those downtrends on the moving averages of the price, but also paying attention to any bullish divergence. You can see there, lower lows on the price versus higher lows on the CCI. And that would have given you an early warning at that point. You would have closed it out at that level there when the moving average band on the price broke up. Again, going short in that little period, you might have had a little break even or a small trade, and closing it out with that uptick on that moving average band. And that would have avoided that drawdown. Same thing would have happened with these other drawdowns. Again, taking short trades only throughout the whole period. Where we are at now, probably the most safest place you would have taken a short trade would have been that period. But again, notice the CCI breaking higher, and you would have closed it out on the moving average of the price. And where we are at the moment, you could possibly take a short trade there. That's where the backtest is indicating, and you'd still be up a few dollars with a short positioning on that one. So Ripple has a similar story, going short from about the 7th of October, a bit further back. Again, going short during that whole period, a couple of false breaks on the price, but notice the CCI is still below its moving average. Now notice here as well, we've got another bullish divergence. So actually that's lower lows on the price versus higher lows on the CCI. That's a bullish divergence. And on this one, assuming that the price pulls back from here, the CCI is showing a small break above the moving average. The price is still below the moving average. So just don't go long. I mean, you never go long on the bullish divergence anyway. That would indicate potentially taking profits off the table if you were going short so far. So again, if the price started retracing to the upside from here, we would draw a Fibonacci retrace. Let's take it back that high. Let's take it back to that significant high. We can expect a minimum retrace to that 23-38% range. Again, that's a minimum, and more than 90% of the time it does hit that range. On the hourly, going short only, again, closing it out when the moving averages turn up, paying attention to any bullish divergence throughout the period on the CCI, opposite the price moving average. Where we are at the moment, again, taking predominantly short trades, you would have taken a short trade from there. Both price and CCI broke down, which is what you want to look for. Normally, when they do work in tangent like they were here, that's what you want to see, and you would have taken a short trade there. Be going short so far. If you'd like to take some share trading ideas, want to subscribe to the Patreon page. These are some of the trades we've taken so far in December, and so far they returned 8,500, and that equates to, in percentage terms, that's 4.82% so far in December. So that's less than a month of 4.82. So if you annualize that, it's a pretty good return. Again, to get access to the bullish shares, why not subscribe to the Patreon page? Links in the description below. Hit that like and subscribe button, support the channel. Thanks for watching, and see you in our next update.